All right, guys. Hello and welcome. Um, Today I'm starting this live stream by myself, and Luca will be joining us very quickly. Welcome to this show, and you hope you're having a wonderful Thursday. For today, like right now, there are many interesting things happening in the market. The inflation report came out not with very good numbers, but the market started rallying from 750 to 54, which is a huge jump in literally 1 or 2 minutes. So without further ado, let me just share in Discord that we are live with our YouTube link, and we can dive right into it. Thank you all for joining and for wonderful suggestions that you keep giving us. We've had some users, for example, suggest that in our flows, we need to allow users to switch their time zone, and that's what we've already started working on, and it should be live soon. All right, so I want to share my screen on a few different things first. Let's do the straight into options flow and see what's going on in the market from the options flow perspective. So this, and let me just explain first the different things you see this here on the screen. So you can modify if you want to see the premiums that go in and out of the market from the calls and put perspectives. So literally, if the call dollar amount is going up, it means people are buying more calls. If it's going up, meaning people sell those calls. This is on a 1 minute aggregated time. So basically, if you go into like 15 seconds, this will be a lot more spiky. So it's going to go up and down a lot quicker, and you can see it kind of correlate with the market moves a lot better. But to kind of see where the market is going, where the money is flowing to, I prefer 1 minute resolution. So you can go back and forth to see like what's going on right now versus what's kind of the trend that's appearing. You also see SPY and SPX. These are on purposely separated because they have the different flows. And sometimes, as you can see here, the price spiked up a lot in around 10, 12. This was caused by the SPX flow, not the SPY flow. You can see that there's a lot less spike here. This means that there is an institutional flow, most likely, rather than the retail. And then, because right now, the SPX chart, the stock price is hidden, but we'll be fixing that. You can just kind of correlate the timestamps here. Well, what is also cool is you can see the prints, and I'm mostly interested in whales, and today we had a bunch of them coming at the same time. There was a ton of volume coming in from the calls right at that mark and slightly after that mark in SPY. So SPY today lagged after the SPX, and we can just take a look what has been going on. There was a sustained call buying that now has dropped. But for you to see like a sharp reversal, we would have to see that the calls and the net flows go down into the negative to kind of negate those previous premiums that went in. So yeah, this kind of spike, just because it went down doesn't mean people took money out. Just means that buying has stopped for now. If you want to see that basically those buyers and sellers disappear and go the other way, we would need to see the reverse way and go into the negative. So you can see now the calls have gone into the negative, and basically people have been selling those profits. You can see it also in the chart, those red dots. It's still like the volume, the amount of premium that has been purchased from calls in this period of, what is this, 10 minutes is still tremendous and a lot higher than what has been going out in the recent few minutes. If you want to see like this is kind of a 10-minute window. You can just click here and you will see where we are at on the day. So you can see this blue line, for example, is still above zero for the day. So this is kind of giving you that aggregate. Same on the SPX as well. So I'm really interested in trading this live. This is a great momentum, and it seems like it's setting up to be some kind of a bull flag, slight pullback. The flows are still in, and I'll be like watching this very, very closely, and see also the actual if there's potential moves. I will also be looking on the sides, our GEX and GEX heat map to make sure that those levels match what we see here in flows, and that there is decent support on these levels before I kind of decided that there's going to be a bounce. Okay, I see Luca is back with us. Welcome back, Luca. I'll continue providing updates as we go through on this live if I see some movements in the flows, but this is looking quite bullish if you ask me for now. I just want to see some confirmed inflow or some more whales buying before committing to a position. But yeah, today was very interesting. Before we go into the other section, just want to show yesterday the explain the trade we shared yesterday in Discord. That was yeah, I think it was right about this point in time. We've seen. Let me just increase the price of SPX. This was closer to the market close, and I think it was right about here in SPX. We've seen from this point, you can see this blue line. Maybe I can just try to zoom in a little bit so you can see it clearer. All right, so the price is stalled around this point, and the flows were just dropping, and went into the negative, as you can see on the left side. At that point, there was nothing similar on the SPY side. SPX had that move. That signaled to me that there is an exhaustion in the market. People are taking profits, getting out, and actually getting into the negative. And you can see this kind of drop in the flows precede this drop here. That was like in the last 45 minutes of the market. So I mean, I bought the puts here and did make 50%. Could have made 50% profit. I chickened out too early. But yeah, also selling the call bull spread is also an option here because we knew that there is an exhaustion. Selling calls on the top probably would have been a better move. But it just goes to show you that this kind of slight nuances and knowing how to read these charts is super useful, especially in the first hour of the market and the last hour of the market. I think we've gone. I got a request to film and like write some more detailed explanations. So as we collect this more and more examples, I'll go through this in depth, probably like 1 hour video, and yeah, go through it all. But this is literally just reading the where is money going in or going out, and seeing whether the chart's moving or it's signaling an exhaustion. All right, this was for the intro. Welcome, David. Welcome, Luca.
See
How's
you
your day
guys.
going?
Thanks, Ivan. I missed the beginning. I was a little bit late, just had lunch, and wanted to introduce David to everyone watching. As always, we are live on Tuesday and Thursday. Sometimes we'll bring traders and people who we think we can learn from and you can learn from. David is a part of the team. He is there from us from almost the beginning of QuantWheel, and he is the guy who speaks to many traders, probably more than us. And he'll share some strategies that he's looking at. He's going to share what other traders are doing, what he learned from the community, and anything else he finds to be valuable. And I would like David first to introduce himself a little bit before we start.
Okay, so basically, a new trader, but I've been investing since I was like 17 or 18. Had a couple of good picks, for example, Coin, and a few others. And my background is also that I was a forex trader. Uh, After some time, I realized that that just isn't the right avenue I should go for, and I discovered options. And with QuantWheel, options became much more simpler and much more logical approach to investing. Um, I don't know what can I add here more. Uh, I'm
That's
in
fine.
contact. I'm in contact with many traders. They all have some sorts of their own strategies. Some are harvesting premium. Some are just doing leaps. Some are just buying calls. Some are just buying stocks and selling calls on it. And I've studied every one of them. So, what my goal here in this live stream is to basically lay out what I think are the advantages and disadvantages of all the possible strategies and how I think is the best way and when is the best way to actually apply them to the market.
All right. If you want to make this as efficient as possible, you can just pick three and then share your screen and show us what you think would be most valuable.
Okay, let's give me a second.
In the meantime, I'll just like to mention a couple of things. I think it's still early. Last live stream 2 days ago, I talked about RoboStrategy, an index on robotics, and it seems like it's growing pretty well. It is around 15% up in these last 2 days since I invested, and I think it's still very early. It's still going to go up by a lot. But if you think you want to wait for better time, you can. But I don't think there will be a better time for robotics than it is this year, probably.
Yeah, I agree. I think Luca and I were after the call doing the research of the price to NAV and like what the stock price should be, just purely based on the NAV. And yeah, I think it was around times 3 compared to the VCX and some of the other funds who have like times 19. So this is still a premium, but a lot less than what other funds are charging. David, like before you get it ready, just want to share the update on flows.
Mm-hmm.
We see we see a reversal in the flows and them coming up on the SPX, but the price not following as much. So calls might be an interesting option here. All right, you can go and share the screen.
All right, we have a message.
Just a second, please.
JD says, "Sounds interesting, but I'm a wheel guy through and through." Same
Yeah.
here. Although, as soon as I learned to trade any situation, my eyes open even more. There are situations where it's very, very obvious what's going to happen. Maybe not in one day, but longer term. And in that case, I would just buy a call or just buy and hold and wait. Same thing like with bot right now. But I'm on the same page as you are, JD.
See my screen.
1 second. All right. Yep, we can see it.
Yeah. Okay. So here's like I picked 5 stocks. Probably I'll add just another one quickly. Give me a second. And I'll just show different approaches and how I think about them. This is the longest I've ever waited for the chart to load.
No
Okay.
worries, take it.
That's most people run the wheel, and what I quickly realized is that people are just too fixed on how much premium they can earn from a stock instead of just treating the stock as it is, thinking about where the stock is right now, where is it heading, and in which sector it is. What I think is the better approach is to first be an investor and then secondly an options trader. And how you do that successfully, you have to identify is this stock currently at its value point? Then secondly, in which sector is it? And thirdly, what would be the best options approach in that case? So let's say, for example, you got the first thing right. You identified that the semiconductors are our next big thing in the market, and selling covered calls here would just be like shooting yourself in the leg. But hey, what do? People come to the screener, see some nice premiums on covered calls, and then just sell a call. And then a few days later, they come on to the Reddit and ask for advice. So the conclusion here is very simple. If you identify the stock in a sector that's currently trending up or is of high interest, then it's best to not use covered calls, because covered calls are by the design an exit strategy. They are capping your gains. So that should be obvious, but people constantly chase premiums, which is a bad thing. Second thing.
So just to summarize, first thing you said, big and most common mistake you see is option traders are inflexible. Once they define themselves as the wheelers, they stick to wheeling even though it doesn't make sense, and the better thing to do would be to hold the stock and wait a little bit longer, right?
Yeah, the problem is, how do you identify when you trade, when you invest? You first always need to be an investor and then a trader second. That's the conclusion here. So can we get the charts back, please?
Yeah, so I think you're right about being an investor. You have to share the screen. About being an investor, I think it solves a lot of problems automatically if you think like that. You got to share the screen for me to be able to add it on the screen.
Oh, it timed out. Here you go.
Okay.
Yeah, on the like selling calls, when you think the stock is gonna explode and like you limit your upside. I mean, I'm okay with that thing. Like, I know I'm happy with, I don't know, 40% yearly, and whatever gets me there, and I hit my yearly goals. I'm happy with that. Like, I don't need to get 1,000%. Do you think people are not usually not ready for it to happen and get their stocks called away?
Yeah, what the next problem, what is the next problem that comes into mind is that they see a stock, they see that it's a good opportunity right now, they sell a call, they say I'm fine with this result, and then stock rockets like a rocket straight to the space, and they miss like 30-40% of upside. And the most common stock that had this situation is Rocket Lab. So as you can see, what do you think covered call guys who sold the covered call think here? They for sure want to roll. They want this upside, but they already made the mistake and sold the covered call. They were fine like 1 month ago with this profit, but they now realize how much they are missing. They now just realize their mistake.
I
They
think,
are regretting.
yeah, I think it's all coming to one conclusion. Are you investing or are you generating income? You can do kind of both, but you separate the mindset. If you are investing, it's a completely different mindset than generating income. What you're describing here is somebody who understands the industry. Rocket Lab is in, thinks it has a bright future, and then just holds for whatever 1, 5, 10 years, versus somebody who earned $2,000 that month to cover his expenses and doesn't care if the stock goes up or down, just cares that he earns the premium and runs away, basically. Doesn't want to wait to retire for 10 years. They just want the money now. And I think, I'm talking in the name of Ivan. We think the similar way. I don't want to wait until I'm 65 to sell my stocks. I can wait, but I don't care if I don't want to depend on the change of CEO in the company, and that is why the stock drops like UNH or anything like that. I'd rather have the money now because I know why I need it and what I'm doing with it, and my primary source of income is something else. This is just addition. Which is also why I lose a lot of money when I'm or miss out on a lot of money. I'm profitable, but I miss out on a lot of money. But I'm fine with that. I tell people how to determine whether to sell or not. Would it hurt you more to lose whatever 10% or 10,000 or to gain another 10,000? For me, it always hurts more if I lose 10,000 than if I gain another 10,000. So it's a good question to ask.
Yeah, I also ask myself, okay, it happened that the Rocket Lab went up a lot, but what if it didn't? What if it went down? Then I would be kicking myself, why didn't I sell those covered calls when the premium was so nice? So with covered call, at least I know that I get the premium and done deal. Like no one can take it away from me anymore. So
exactly. Yeah, I think the same way. And David is not here with us. He'll rejoin. Probably some problems with the internet. But what is new in the market these days, Ivan? What did you notice? I don't know if you spoke about it already in the beginning of the live stream.
Spoke a little bit about SPY and inflation, but it seems like Snowflake had great earnings.
Yep.
I think they did not raise guidelines for the future a lot, but they're getting the AI revenue, and the stock was already beaten down, so people just picked it up on it. It also took MongoDB with it. I think they are very correlated, but interesting set of earnings. Welcome back, David. And the inflation. I mean, also the consumer strength. Yeah, the consumer strength is very very poor. I think it's at the historic lows. So a huge disconnect between the market rallying on AI and the actual economy. That's what's kind of in the market news right now.
I would mention a couple of stocks that I'm looking at. First one is Reddit. I'm going to share my screen. I think Reddit is in a very nice position because out of all the social media and all the communities, it's fighting against robots best. And it is difficult to replicate that. Let me show you like this. And it's difficult to replicate what Reddit is doing. Like if any other social media wants to do it, they would need to change the algorithm. They would need moderators. A lot would need to change, and that is very difficult. So I think Reddit is in a great position. I already, and I also think they're going to go up because their revenue and the fundamentals are very strong. Like you can see here, AI working for us for the analysis, similar to QuantWheel. I think Reddit is a pretty good, maybe CSP at 145 or something like that. If you just want income, if you want to buy and hold, that's also smart. I think we're very close to social media getting only AI content and getting so boring if you're looking for human beings. I think most people will not care, but if you want to see honest suggestion from a human being, not an AI, Reddit might be the only place where you'll be able to do this very soon, even though they're fighting against this too. So, what do you think, Ivan? What do you think, David, before I move on to the next one?
Yeah, I'm thinking recently more and more that whenever I use something, I should just also buy their stock. Like as long as I'm using a product or a company, then yeah, why not buying their stock as well? So yeah, Reddit is one of the rare things that I use on the internet to get information recently.
Mm-hmm.
Yeah, I agree on that.
And fun fact, did you hear about, so I read a little bit about NVIDIA. So fun fact about NVIDIA is the PE is now, what is it? It's low, I think 23, something like that. Market cap is 5.1 trillion. And all the land in Australia, I think, is 17 trillion. If you were to buy all the land, 1.7 trillion or something like that. Actually, it's lower than NVIDIA's market cap. So it's a little bit crazy. Also considering that AMD, Apple, Google, and all the biggest companies are already making their own chips. And I know the whole world will run on AI anyways in the future, but the cost of creating chips will be lower, cost of energy will get lower. The big thing are maybe resources, but once the open source models become so capable as if they become as capable as 5.5 GPT or Opus 4.7, my prediction is that a lot of these commodity LLMs are going to lose market share, and people are just going to install their AIs on their laptops and use their processor, because most people don't understand that, but Apple has some of the best chips in the industry, and they're not competing with NVIDIA directly. And I think people have recognized this. I'm not listening to myself always, super busy, and I don't react as fast, but I've been saying this for a while now. Apple's chip on Mac Mini or MacBook Pro even, and you can stack them sometimes, like if it's Mac Mini, it's enough for you to run AI, most capable AI on your laptop. And soon, in the next 12 months, I think it's going to be enough to do everything you want. You will not need anything stronger. Unless you run research, unless you do something that is very processing heavy, it'll be enough to have a MacBook and that's it. So I'm not sure how the future looks like for AMD, NVIDIA. Probably it's still bullish, very bullish, but I don't know until when. Because look at who is paying for ChatGPT. Only about 5% of users, correct me if I'm wrong, are paying for subscription, and most of them are entrepreneurs or software developers.
Yeah, that's interesting
Students.
stats.
What do you think, David?
I agree, but I think the percentage is slightly higher because there are also students which use AI to learn, to research, and etc.
Okay. And what do you think about Microsoft?
About
Recently,
Microsoft,
Bill Gates sold all of his stock recently, Microsoft, and it's a SaaS model. It's the oldest company, I think, in Magnificent Seven. What do you think about it?
I honestly didn't even think about it, but if he sold his position, that probably means something that probably means that he knows something that we don't. Just joking here. I don't know. I have no opinion. I can't say anything because I didn't do any research on it.
Okay. Ivan, what do you think?
Yeah, I've worked with Microsoft, and I've held Microsoft shares for a very long time as well. And every time I think, okay, this is it, I need to sell my shares, and like it's gonna crash, it just keeps going back up, keep going back up. I think Microsoft has the best enterprise sales in the world. That's not gonna be easily replaceable, and also
Agree.
great government deals. So those are some things that are not just like, hey, AI is gonna do it. What I'm looking here is it broke below this kind of trend line. I think also on the log charts and stuff. It is not looking very bullish. So I mean, I like the company, I like the stock. This might be a good time to enter, but more like a long-term position, not as a swing trade. So this is an interesting level right now. You can see it's kind of trying to break it. So it might be a good day trading opportunity here, less of a wheeling position, I think, in the moment.
All right. Can you change to SoFi?
Oh, that was gonna be my question to you.
Yeah.
I wanted to talk about SoFi today because okay, it did have a jump. Okay, this is the log chart I had, but SoFi, I think I read they have the lowest book to value in finance at the moment, but the
Yes.
highest growth rate.
Yes.
So it's interesting that the price is dropping that much. I mean, I did wheel it for a long time. I took some profits, and then I saw this kind of trend line break, and I'm not touching it ever since. But now, like looking at those numbers, I'm considering to like re-enter, given like this is probably like obsolete. This has been broken, and there is some support kind of long term in this area. Like it, I don't see it dropping that much in the future. What do you think, Luca?
I see this as an investment, not really a premium play. This is one of the stocks which I see will go up long term. I think the banking industry is so old and so slow that they might be either partnering up with some bigger company. I don't think they're getting acquired, but I think a lot of young people will. They don't have many places to go. They can go to Robinhood and they can go to SoFi and maybe 2, 3 other companies. That's it. And a lot of wealth transfers happening right now. SoFi is a great trading platform, a broker. It's a bank. It reminds me of Revolut in Europe. I think Revolut is one of the best companies ever when it comes to product and how they run the company. And I wish more companies were like that. And I think SoFi is Revolut for the US. So I'm very bullish on them. Of course, anything can happen. It's not an old company. It's got a lot of competition as well. But from what I've seen, has a huge community of traders and investors and people using it, fans, and that's not going away easily. So I would buy, and I bought at 16 some time ago. This is not a financial advice. I just had to say it probably, but I bought at 16, and we'll see what happens next. I'll probably wait for it to get to about 2025, then I'll start selling covered calls.
Thanks. Yeah, I'm slightly worried about this kind of trend line and not being able to break it. So I'll consider starting with cash secure puts, maybe some leaps as well. Yeah, I think a leap is a good deal right now because the price is relatively cheap. Yeah, I think leaps might be interesting.
Leaps are probably a pretty good investment on SoFi if you're
Yeah.
not planning to hold it for a long time. What do you think about HIMS?
Hey, before you jump to the hymns, I don't know if you know, but SoFi CEO recently bought like a bunch of shares for $2 million in three different transactions.
Yeah,
So
it could be
that
anything.
to me is a good bullish signal. He means that he trusts his own company and he's putting his money where his mouth is.
Yeah. Yeah, it's always a good signal, but it doesn't need to mean anything. But I'm rarely wrong when I'm looking long term. I'm rarely wrong. Like I'm looking at the bottom, I think this is the bottom. If
Yes,
this is not the bottom, then probably it will drop even more to 8 or whatever, 10, 8. But I'm ready for that. I'll probably buy more stocks if it drops even more.
DCA.
And I'm thinking in the last 10 years before I started trading options, I only bought stocks where of the companies where you cannot afford not to pay their bills. And I think if you have a bank and you're paying for transactions, you're paying spreads, you're paying exchange rates, you're paying different commissions, you're paying for subscription. SoFi has subscription, and they have probably 10 different ways of earning money, and their marketing is brilliant, and they know how to acquire users. And if you look at how many users, I think they have over 10 million users. And I think you cannot afford not to have a bank and not to pay a bank. It's not luxury, it's just standard move. And you have no other options. Where are you going to go? Schwab, Wells Fargo, all of these giants are pretty boring and too slow and not modern enough for the young people. So
Yeah. Fun fact. I don't know if you guys know when the bank in the Silicon Valley went bankrupt. There was a change in the law because the government had to bail it in. So they changed the law where the government now allows banks to bail out. Actually, no, they can bail in themselves with people's money. So yeah, I personally recommend folks to just use, I don't know, Fidelity and keep it in a sweep account that follows treasuries. That way you get those, I don't know, 4% interest rate, but it's also tied to a treasury. So like no one can actually use it to bail themselves in. Obviously you need liquidity in the bank, but yeah, like keeping money in the bank right now it's very risky.
yeah. Yeah.
Side note, yeah.
One more. So we can look at the ARM, we can look at HIMS, and
Let's go HIMS.
SPI is also in my portfolio, exploding at the moment. And this week has been great.
HIMS, I know we've all made a lot of money on it. We've been billing it for a long time, but I think I've started trimming it down when I saw this line being broken. And obviously there was a rising wedge here as well. Luca, you called it, your call. What are we thinking here?
Well, I was again didn't listen to myself. I was planning to buy it at 15 when it was so unbelievably low compared. So the key here, guys, is if you're trading a stock, trade it for a long time so you understand what's happening. It's very easy for me to understand that HIMS is undervalued because I've been trading it for a year and I see 15 and it's unreasonably low. It's crazy low. It was crazy low at 15. And also I have friends who are in the peptides industry. If you know about peptides, it's something that's coming up in the US. It's a huge trend. There are a couple of record-breaking companies that are growing very fast selling peptides, and it's gonna get regulated probably, and everybody's gonna jump on the train. And HIMS is one of the companies that is or is the leader and will continue leading. And I think it's still going to I'm still bullish on it. It's still going to go up because of peptides if it continues specializing in pharmaceuticals that are easy to reach for normal people. Like they have amazing marketing. I like the company, even though they're just let's say just e-commerce. I think they're leading in this space, and I think that space will grow very fast.
Are they competing with LLY, Lily?
I don't think they are. They might work with LLY.
Okay. Yeah, from a technical perspective, I think this is a super interesting moment where like there's a, what is it, 2021 high, also 2024 high, that then became a support level in 2025. We broke it back in 2026, and now we are looking at it right in this moment. Let me just go back up here. And it's also coinciding with this trend line as well. Kind of the most recent one that was a kind of a classic bear flag or slight rising wedge. So I think at this moment, buying calls and buying puts is a great play. I think there's potential to explode either way. What do you think about this? Basically, a strangle.
Yeah, for me, because I've been trading it at 16, I've been trading it at whatever, 25. I'm not interested to touch it at the moment. I missed the opportunity, so I'm fine. I'm fine waiting.
Yeah, personally, I think betting that it's gonna explode either way. If it doesn't reclaim these highs, I think it's gonna drop sharply, and that's when I'm gonna start looking at selling cash secure puts around 15 level. As you mentioned, that was a great level, but yeah, it could also explode up because it's a good company. Good analysis on this one. I think I'll do some trades on it right after this call.
What do you think about AMD? I think this is madness. I had AMD.
Look at this.
I had covered call at I think 220, and I've been covering calls all the time at like this level, and then it just exploded. I thought it'll stop at 230, 240, and it went to 400, and I still see it going up. And I think this might be a potential short. I didn't check in detail, but this looks unreal to me. Just because it's in such a short period of time, it doesn't mean I'm right. I didn't do my research, but it just looks unreal.
Yeah, I think you have to be very careful with shorting this. Like when it breaks this kind of a channel with such momentum. Okay, we can see that. Okay, the volume is still low. That's an interesting piece of information. But it's this kind of look at this move. Yeah, you're right. If you remove the log chart, wow.
And I'm just saying, I'm not saying it's not worth 800 billion or whatever it is worth now. It still sounds low to me. It should be a $1 trillion company because it's just competing with Nvidia. It's the biggest alternative. I didn't check the earnings or anything like that, It's just that in such a short period of time, such a big correction in valuation is weird to me. And I think there's going to be correction in the other way before it continues growing. Just because that's logical to me, it doesn't mean it'll happen.
Yeah, in this market, it seems like everything's just going up in the semis and
Yeah.
anything AI related.
And one more thing, I don't know if how long we're gonna be on this live, but I just want to mention also that for anybody watching, be extremely careful. Nobody knows what's going to happen. I'm reading about bond markets, and bond markets in the entire world are going crazy. And basically, what bond market is basically it's government lending, and the governments are stopping trusting the U.S. dollar, and nobody knows what's going to happen. But apparently, it's going to happen slowly. So slowly, the government of the US is going to be forced to raise interest rates because they will have no one to lend money from. So right now, they're raising interest rates on treasuries. So the yield is getting higher because the US needs to attract more lenders, and it needs to refinance their debt. And their debt is, I think, 39 trillion. And it does not include their obligations, future obligations, which they already signed the contracts and have announced already, and they're obligated to invest in, like roads, schools, and military and everything else. So they already know probably if they're fucked or not, but they're going to have to increase the interest rates, sell the treasuries, sell the bonds to get more money and refinance the debt. And I don't know if that is sustainable. Nobody knows. But imagine if you're a stock investor and you have 100 million, where are you gonna put them? Right now, it's very difficult to know. Bitcoin insecure because of quantum computing and who knows what, whether you believe it or not. You have gold, which is pretty high already, but nobody knows what's going to happen next. You have treasuries, which is 5%, 4.5%. But again, even the US treasuries are not that safe. So what are you going to do with your money?
Yeah, this is like the chart to watch. I think the US 20 and 10-year yields. Yeah, as you mentioned, like it's basically the government wants those yields to go down as much as possible so that they can refinance their debt in the cheapest way possible. Same as like with your house. When you want to refinance it, you want the lower interest rate. But for that to happen, other governments, other countries won't need to want to buy the American debt, and right now they just don't want to buy American debt. That's why the like rates are increased to attract them. So it's kind of like
Go
if
show.
this breaks,
Yeah.
yeah.
I think what's interesting is to see Japanese yen and Japanese bond market right now to show what's going on there.
Before I do, I think this is the chart also. Like you can see it wants to break up. I think we are going to see. I mean, we're not dealing with predictions here, but I think we are going to see 6% yield soon. I am personally, I have puts on TLT. So TLT is basically the strength of the bond market. So I'm betting that the bond market is going to crash. But okay, let's go Japanese. I have macro watch list with all my bonds. Let's do the Japan.
Look
Yeah,
at it.
I mean, whatever you look at it, it's so crazy, right?
Yeah.
Jesus.
Yep.
And just to give you background, Japan was the biggest buyer of US treasuries. And right now they realize they haven't been able to finance their own They haven't been able to sell their own treasuries, and now they're trying to get out of this mess. They're selling tons of US treasuries and increasing the interest or yield on theirs to attract as many investors as possible. Also, the Japanese yen, I think, is crashing. I don't remember what was the last situation, but the economy is probably in a big problem there, and it's translating slowly into the market. So it's not going to show immediately, it's going to show slowly.
Yeah. Do you guys know about the yen carry trade?
I read about it, but I forgot.
But basically, look at this, like this yield on the interest rate on the Japan 10-year yield was so low. People were just basically borrowing money in Japanese yen, getting in debt, and then buying US treasuries.
Yes.
Even like regular people. So that's why, and the Japanese government was encouraging it. That was kind of a deal. Basically, Japan was allowing financing of purchases of the US assets and US debt. So you could just borrow money basically for free in Japan and buy S&P 500. And people are doing this for like decades. Look, this is
That's
like
what Warren
16.
Buffett did.
Yeah, exactly. So now when this is going up so high, it's interesting what's going to happen. And this is not just Japan, US; it's everywhere. Like the European interest rates, everything's going up.
UK one is
UK,
also crazy.
yeah.
Even worse than the US, I think.
I'm not sure what a ticker is, but yeah, the money that also is kind of following it, the US dollars and yen, Japanese yen, is showing the same picture, but like this is not that important, because this is just showing you relative strength between the different currencies. You can see that both yields are going up, both Japan and US, meaning both of their economies are going down, and there's just the ratio of the currency is just showing you which one is doing it faster, and that's it.
Yeah.
This doesn't mean like you should buy US dollars, because they could both be failing. So
Exactly.
the debt markets are the backbone, and that's what we should be watching. If that breaks, yeah, we should be very careful.
The problem is nobody knows what does it mean break, and it could continue for another decade. Also, another interesting topic is SP 500. I've already heard a couple of huge investors saying it's going to be time of S&P being stagnant and the next 10 years, just because of what's going on. I think it'll either be stagnant or it will continue exploding because of productivity increase. So I wouldn't bet it's going to be stagnant. So it's another interesting theory.
Yeah, in all of this, in all the scenarios, and also including war, gold is usually a good thing to have in your portfolio. Historically, who knows, like what's going to happen in the age of AI, right?
Yep, that's why I think it never happened before. We have nothing to compare it against. The only thing we can compare is US dollar. There wasn't a currency that existed more than 40 years. There have been over 3,000 currencies in the world in the past, and every time there is a global currency, it doesn't last more than 40 years. And US dollar has been now here since 1973. Before that, it was gold standard. Now it's US dollar, where they print cash as much as they want. And probably the next thing is going to happen in this decade, and it's probably going to be some kind of crypto or coming back to gold standard.
Yeah, that's a interesting geopolitical story that still, like, China has been buying a lot of gold, obviously, and there has been an increase in the number of transactions in Chinese yuan. But I think still 70% of all the transactions in the world are in the dollars. So it's gonna take time until that happens.
Yeah.
Yeah.
True. All right, we've been talking almost for an hour now. We gotta leave something for the next one. Thanks, David, for joining us. If you want to join the next one and
Of course.
think of the topic, you know what would be cool if each of us has to prepare something for the next time, because we know what we're going to talk about. But if there was like one thing, or each of us, one stock, one problem in the market, and one strategy or stock that we're trading, one stock we're looking at, and the overview, that would be pretty cool.
I agree on that.
Then we can cut it in shorts and post everywhere also. All right. Awesome.